So we're still talking about developments in the energy markets, and very recently the federal government announced that it will begin bids on oil blocks from the month of May. And that, of course, has generated a number of conversations, especially since there's still some controversy surrounding some of the oil blocks already sold. Dolapo Oni, who is the head of energy research at EcoBank, joins me now to talk about this issue. Good morning to you, Dolapo. It's great to have you join me on the program.
Good morning, Harriet. Thanks for having me.
So talk to us. What are the issues, historically speaking? How much or how many oil blocks has Nigeria got, and how many have we sold?
Okay, I can't possibly put a number. But if you go to DPR's website, it gives the statistics of number of blocks we have. I think we have about 216 blocks that are currently available, that are currently producing somewhere in the region of about 190, I believe, blocks as well, so that are currently being actively used, or that have been sold or licensed to operators in the past. Somewhere within that region.
But then, Dolapo, taking a look at this, some 260, how viable are these blocks? Because coming into May, a lot of investors are looking at the opportunity of buying into a very viable industry. So how viable are these blocks?
Okay, thank you. There are two parts to the bidding round that will be happening in May. The first part is for the normal blocks. So I'm talking about the OPLs. And then there's the second part for marginal fields. So there will be a section for marginal fields, which are really fields that are already proven, but the reserves are falling below levels that the IOCs are willing to invest more money on, or maybe they've had to relinquish those fields because they've not been able to allocate funds to develop them. So we've seen marginal fields with really large reserves also sold in the past. So but for the OPLs, some of them are actually in close proximity to OMLs that are already producing, that have infrastructure. So some of those fields are actually quite attractive. Some of those OPLs are actually quite attractive. There are others that are totally unproven. They're they're in basins that have not been proven at all. But then the interesting thing is that there's a lot of data. There's 2D, there's 3D on nearby fields. So it's possible to extrapolate that there could be some potential. So, investors will typically look at the data. They'll go into the data room, which will be made available to all investors, and they will assess and check that they're actually bidding for blocks that could potentially be viable.
But from your own estimation, what would you say, or which ones in particular do you think investors will favor? Of course, there's the ones that will be the potential revenue earner. But then there's still issues around those which have already been sold. And so in coming into this kind of market, you're looking at how... making sure that all the T's and C's are met by both parties concerned.
Yeah, and it's important you brought that up, because if you think about the fact that the last time Nigeria held a licensing round was in 2007. And, the records show that most of the blocks that were sold in that licensing round particularly, a lot of them still haven't been developed to date. Very few of them have actually seen any real drilling work done. And the last data I have shows that there's still about $2 billion of unpaid signature bonuses for most of those blocks. You also have, don't forget, about 30 marginal fields that were sold. Only about 8 are currently producing. Again, some of those marginal fields have not seen any significant investment in drilling or development. Some of them still have a lot of unpaid bonuses as well, signature bonuses. So you want to ensure that this particular process is well designed in such a way that it actually discourages unserious bidders and it encourages people that are really interested.
But then you see, sometimes for the very best of interest, you would want to have everybody given a level playing field. So at the time, you might feel that all bidders are, viable investors, but then it turns out to be something else. But then issues around raising money. Do you think that this oil blocks can give Nigeria the serious investors, serious money from investors that it needs?
Okay, there are two parts to that again. So one part is where will the funding come from? Now, I think this particular block, while it's quite interesting to a lot of local companies, I don't think there's any local banking appetite to fund acquisition of oil blocks, mostly because the banks are already very exposed to oil and gas. From the first-tier banks to the second-tier banks, if you check their exposure to oil and gas, the industry average is still roughly around 26%. So it's going to be dicey to get any real funding locally, so which might affect the local oil companies in terms of raising money to buy these blocks. So potentially, we see more of companies that may have international, financing arrangements, or that have access to private equity, or have access to some sort of mezzanine capital or the other to finance those acquisitions, that will be the ones that will be able to bid for those assets, or those that have international partnerships. So, for instance, if you have a local company that has a partnership with a foreign partner who can bring the capital to acquire the asset, especially after they've proven that, it's a viable block, then those are the kind of people we might see. So in terms of what Nigeria could then benefit, I think it could actually be quite lucrative for us. We haven't done a bidding round in a long while. All around us, various African countries have been conducting bidding rounds since 2013, and they've been roughly successful. Don't forget, Uganda did its own last year, and even Nigerian companies were among the companies that won blocks or assets in Uganda as well. So there's appetite both internationally and locally for blocks. Funding is going to be a bit of a tricky issue because of the local banking environment.
So we could possibly have more than 2 companies coming together to purchase one of these blocks. But then again, it raises the question of trying to encourage more domestic players in that segment of the industry.
Well, the thing is, maybe for the marginal fields, and again, still the funding is still going to be an issue because, again, I think our local operators still need to embrace more equity in their business. There's so much debt, and that limits really what they can do, because acquisition financing typically should be more from equity than from debt. Because acquisition financing is what it is. Acquisition financing. You haven't developed the block yet. You haven't even assessed what it will cost to re-enter the well. You have not started that process. So it doesn't really generate any funding revenue in itself. It's the RBLs, reserve-based lending, or field developments that actually then generate revenue. So that's the kind of lending that banks typically should be doing or will be doing, going forward especially. So acquisition finance will be difficult for local investors. I think foreign investors who have access to more equity from foreign markets or even from local markets will be the ones that will be able to achieve such.
But then it opens the market up to a very large audience. Talking about international companies that most likely will be coming in, because you already mentioned it, we have a lot of international attention being paid to that particular segment of the industry. But how much do you think will Nigeria be able to cope with it? And we won't have any issues of fraud coming up.
It's always an issue. We can try. We can try because, for instance, like the last bidding round, we decided to implement a sort of fixed signature bonus across blocks, which the idea was to provide a level playing ground for all participants. Might not necessarily be the best option. We might have to consider, allowing the blocks to be properly priced so that, blocks with higher reserves should not have to be with the same signature bonus. There's so many other ways we also structure in terms of showing that you have the funding ahead as well to, let's say, a letter of commitment from your banks or from your funding or financiers, to show that you actually have the fund to pay for the signature bonus and also to develop the field. And then we'll also want to see an idea of your drilling plan. How many wells will you plan to drill within the next 5 years? And of course, it won't just be a blanket, you buy the block and you have it for the next 20 years, whether you do anything with it or not. No, it should probably be a limited period, like a 2-year or 3-year or 5-year at most period. If within that 5 years we don't see any real drilling done, we don't see any real appraisal on them, we know that they are not really planning to do anything, and then we can take back the license. So there are ways I think we'll be structuring this particular bidding round to ensure that we get serious investors who actually are ready and are actually capable to fund these fields.
For you, Dolapo, how would you think the structure should look like?
Well, like typical bidding round, just like I mentioned, that's how it would go. We need serious levels of commitment. It works in various parts. There's the technical aspect. We see your technical capabilities. We see your financing capabilities. We understand what your commercial plan is. And then we pick the best from those group of people. International, of course, auditors will also be involved to ensure that there's a lot of openness and transparency in the bidding round. We know the companies that are going in from the beginning, and perhaps maybe an open bid will be preferred than a closed bid.
A closed bid. Well, Dolapo, thank you so much for your perspectives this morning. Dolapo Oni is the head of energy research at EcoBank.
Thanks for having me.
Well, Business Morning continues after now. We're still talking about the state of the economy and still on the issue of Nigeria's February inflation numbers, which was released by the National Bureau of Statistics on Tuesday. That came in at 7.78%. We're still taking a look at the impact on the economy. Join us again.